welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza with you on this cold and rainy Tuesday morning where I'm at. I hope it's nicer where you are. What's on our radar for today? Let's look at the dock. What do we got on the dock? We got some earnings. We got some Zoom. We got some calls, maybe. Maybe we'll talk about the dollar and the rates a little bit. Our guest today is Ari Wald. Always a pleasure to talk to Ari. We'll have Kenny Glick on the show today. We'll have Patrick Donawilla on the show today. And PSA, don't forget, 4 o'clock today, our latest breakout multiplier event. Steve has been absolutely crushing it in the last few weeks. If you don't know about the strategy and what he's doing, I'm going to drop the link in the chat right now. It's 4 o'clock Eastern time today, totally free event. And you can see how Steve has been really kicking ass the last couple weeks using this strategy. It's been working great for him. So that's at 4 o'clock today. Be there. And let's start the show. Smash the like and morning chat. Hope you're all having a good start to your day. I am. Let's go. Let's go.
Oh, good morning. Good morning. We are back, baby.
How we doing?
This is maybe my favorite week of the year.
That's what we were saying yesterday. Yeah.
Yeah, it's really turning out that way too. Dolphins are playing prime time Thursday night, Thanksgiving. I'm telling my wife, I'm like, you gonna stay up and watch it with me? She's like, no. This is what happens in marriage. Back in the day when we first started dating, she would watch all the Dolphins games with me, all the Hurricanes games with me.
Wow.
Then we moved to California, and then she would go shopping during the games. And now she just ignores them completely like it's not even happening. Is that how that works?
Who are they playing?
Packers at Lambeau.
Oh, that's a good game.
Yeah. Lambeau, what a great place. This is a place that I've wanted to go to my entire life. I finally got a chance to go a few years back. I guess like 5 or 6 years back. And it did not disappoint. Actually exceeded expectations. And you know how like when you want to do something for so long and you finally do it, it's like, how often does it actually exceed expectations? Dude, Lambeau Field is freaking awesome. And technically, it was 31 degrees and there were some snowflakes. So technically, I was in the frozen tundra of Lambeau Field.
Technically.
Mathematically. I was in it wasn't that cold though, which the fact that I could be in the frozen tundra of Lambeau Field and it wasn't that cold, that's a win, right?
It's part of the charm is you want to freeze your ass off. That's the point. But all right,
whatever. It was cold,
All right. Strazza will be in a minute. Let's do state of the markets.
Do it. All right, ladies and gentlemen, we've got that Dow futures down 140 points this morning. That'll put it at 44,700, just below that. S&P 500 futures up 0.25%, up 13 handles, above 6,000. NASDAQ 100 futures pushing 21,000, up 0.25% this morning. So the Dow holding it back. Bonds, what a day yesterday. Hanging in there today, pretty flat, down about 0.33%, 118 on the 30-year bond futures. Crude oil up 1%, hanging out that 69 level again. Copper flat on the day at 410. Gold up 0.5%, 26.30. Silver up 1% this morning, 30.5, with the volatility index at 14.5. Hanging in there all right. In funny money, Bitcoin down 7,000 points off the highs, 92,350, down 0.75% this morning. Ethereum down almost 3% this morning, 3,300 and change. Solana 228, down almost 3%. Binance 615, down 3.5%. Total crypto market cap, Spencer Israel down to 3.1 trillion, with the Bitcoin dominance pushing new lows again, down to 59%. With that strength in Ethereum, how do we feel about the futures this morning?
We feel okay. I don't know if I feel anything about the futures this morning.
I don't know if I feel anything about the futures this morning either, I must say. The bond situation yesterday, the stock market situation yesterday. If you want to throw up slide 2, This is a big one because we have had quite the rally in yields as bonds got crushed. Saw quite the rally in the U.S. dollar. And I gotta say, I am impressed with the strength and the resiliency we've seen in the equities market, despite the ripper we just saw in the U.S. dollar and in rates. Granted, we are now in year 3 of a bull market. Correlations among assets and equities overall are at the lowest levels they've been this entire bull market. So we don't want to, Spencer, when we talk about
Overthink.
what's that?
You don't want to overthink it.
This is not the type of environment where you want to overthink it, right? So
Yeah.
if you would have asked me 2 years ago, or even at some points last year, we want to really focus on these intermarket relationships because correlations were much higher. So this goes back to the old adage of the first thing we want to do is identify the type of market environment we're in, and then decide which tools and strategies are best for that type of market environment. And we are in the type of market environment where overthinking the intermarket relationships probably does more harm than good, versus other types of market environments where not paying attention to the intermarket relationships probably does a lot of harm, right?
Yeah.
So that's how I feel about that. Now, despite all of that, my conclusion remains impressed with the resiliency in equities despite the strength in the dollar and yields. Now, how impressed am I? Probably not as impressed as I would have been maybe 2 years ago in a situation like this, but a net positive for the equities market, in my humble opinion. The next thing that's interesting, Mr. Spencer Israel, the boys over at the Breakout Multiplier have highlighted the opportunity in solar, and we will discuss it today. If you want to drop the link there, Mr. Spencer Israel, tonight we're doing a little dance. Mr. Steve Strazza and I were getting a lot of questions about the Breakout Multiplier. Throw up the solar, Spencer. Getting a lot of questions about the Breakout Multiplier. Why is it working so well? What is the process? I mean, we've gone over it a few times, but we're going to answer some questions this afternoon. We're going to walk through these trades one by one. Not all of them, of course. We'll be there all night. But we're going to walk through some key examples of why it's working so well. We're going to walk through some of the ones that did not work as well. And talk about what we do in those situations also. But this one is really, really interesting. I love it from a sentiment perspective. Contrary to popular belief, Mr. Spencer Israel, it's not the fundamentals that drive asset prices. It is positioning that drives asset prices. So Donald J. Trump won the U.S. election by a landslide. Wasn't even close. It was hilarious that these pollsters were telling us it was going to be close. Complete domination in the election. And we knew that going into the election, right? The market was already pricing that in for the most part. So the initial reaction, oh my God, Donald Trump's going to be the president. Solar stocks, sell them all. There's no way Donald Trump is going to be great for solar, in theory. And so they immediately did sell them off. So when we talk about how the market was pricing in a Trump landslide, it wasn't a lot of cases, clearly not here, which I thought was really interesting. So they immediately knocked them down. Algorithms, humans, algorithms built by humans, all knocking them down. And then, slowly but surely, stopped going down. Notice, Spencer Israel, that momentum never reached oversold conditions on any of these sell-offs. And oversold conditions and momentum are characteristics of downtrends. And this is the market suggesting to us that perhaps solar stocks are not actually in a downtrend, but in the process of accumulation and heading substantially higher. Wouldn't it be if solar stocks rip on a Trump election victory?
Would it be the craziest thing ever? No.
That would make actually
But
perfect sense.
are you suggesting that solar is not in a downtrend? Because it is.
I am suggesting that it could, based on what momentum is suggesting, is that this could very well be an accumulation phase. There's no question. And you're looking at the solar ETF. If you were to dive in on some of the stocks in solar, I can present you with the largest stock in solar if you'd like. And we could talk about whether this is in a downtrend or not. I would argue that there's a very high likelihood that this is not in a downtrend. Can you throw up a one first solar, please? Chart Master Flex. Fonzarelli. How about that? Does that look like a downtrend to you, Mr. Spencer Israel?
The green circle, no. But everything before that, perhaps.
And if this stock is above 200, would you argue that it is a downtrend still?
This is also the bellwether, such that one exists, right? Of solar.
Good point. Good point.
It's the
Yep.
closest thing you have.
Yep.
Um, yeah. The problem with solar, though, as you can see there in May, is like it can get going so quickly, and then it just like the trade unwinds is just as fast, right? So I don't know.
You're not into it?
Would I bet on that? I guess like I got to see a little more, right? You got to see a little more.
Well, we already put on a bet, so no one's waiting for you, Spencer.
All right.
I appreciate your patience, but we don't have time for your patience.
Okay.
Right? It's money making time. I don't know if you heard. Get while the getting's good.
Oh,
I believe it's what.
I'm well aware. The yellow portfolio is at full tilt right now. So
Yeah. So the trade is already on.
yeah.
We're gonna walk through the process of this today at 4:00. So we will see you there tonight, 4:00, and it will be nighttime probably because it gets dark early around here.
That's true.
Which is fine. It's okay. We had maybe the greatest fall that I can remember. What a great fall. Like it's clearly over if you've walked outside this week, but winter is here. But man, what a great fall. Would you agree with that, Spencer? Do you remember a better fall?
In terms of like the trading and the stocks and
The weather, bro.
it was an interesting fall. The weather didn't turn until like 2 weeks ago. It was so we didn't really, and now it's chilly, but it didn't get down to like the 50s, I feel like, or 40s until like literally recently. So it was a warm fall, but I liked it. I have no complaints.
We have Ari Wald on the show today.
We do. That's the plan.
Ladies and gentlemen, we are in for quite the treat. Mr. Ari Wald, one of my personal favorite technicians. We don't let him get away with any shit, and he doesn't let me get away with any shit. And that makes for a good conversation. If I throw something out there that he doesn't agree with, he's going to push back on me, and I will do the same. Rarely am I able to stump Ari Wald. Maybe we will today. We probably won't. He always brings a fun fact and some interesting perspective that perhaps I may have missed or so. Very 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 blessed to have Mr. Ari Wald here today, guys. What a treat.
All right. Well, I know
ahead.
Steve is not here yet, which is bummer because I want to talk about Zoom right now. So maybe we'll do that before we bring Kenny on. But we did have Zoom earnings. We talked about this yesterday with Michael Batnick. They were front running this thing really hard. And I think do I have a chart here somewhere?
So they reported yesterday after the bell.
There we go. There's my Zoom chart. So obviously not showing the price action this morning in Zoom, but it was actually a pretty good report as far as the numbers go, right? The stock is down 7%, which we've talked about on a number of occasions. It's not so much about what the numbers are, it's about the reaction to the numbers, and very often that reaction is colored by what the stock did before the report. It's been on a tear. So the numbers were good. They beat on the top and the bottom line for the quarter. The guidance was good. They also raised their guidance for the fiscal year. Mostly all good things to say, but like we've said, the stock's been on tear. So without sounding cliche, some of this is probably already priced in. So this morning we are down 6.5%, give or take, and that's the reaction on Zoom. How much more do you want to go?
When we're looking at the revenues, it was like Kathy Wood was projecting like $200 billion in revenues, and like $100 billion was like the lower end, and like they're nowhere close to that. Like it was like really, really, really far from reality, huh?
What's weird about the Zoom thing too is they said that despite a decline in website traffic, they were doing better monetizing the traffic that they got. Here, let me read the exact Yeah. A significant drop in website traffic. They increased their revenue in spite of that. But drop in website traffic, not the best indicator, not the best sign. So, but it was mostly good. Like I said, the churn is at an all-time low. The revenue growth, the enterprise revenue growth, increasing year over year. Those are their high-value clients, and yeah, it was mostly good things. But how much more do you want it to go? Hey, Steve, how
Strauss,
much more do you want it to go?
any thoughts on this?
I think they've been pricing in a beat for a while now. I mean, look at
Yeah.
what the stock has done.
So it's down. Well, we're down 5% this morning.
I kind of like this price action here pre-market. Let's see how it shakes out once the bell rings. But they killed it at first, it looks like, and it's clawed back a lot. It's trying to get back into that gap from Tuesday.
So if the price right now is at 84 and a quarter, that would put it where it was on, what day is it today? Today's Tuesday, so this is Friday.
Yeah, the gap from Monday then. Yep. Yes,
Right. It would put it at Fridays. Oh, it's like a weird week. It's like today's really Tuesday. All
You
right.
know, we've gone in and bought a number of these speculative growth stocks on a shaky earnings reaction over the past, I don't know, several weeks and months. We did it with Rocket Mortgage. We did it with GE. Not that that's speculative growth, and we just recently did it with Square, where we came in and we actually bought it on a red candle that was hollow stick because it was climbing back and clawing back all those gains, and it never looked back from there. And we continue to see that with a lot of these earnings reactions. You get a knee jerk in one direction, and then it goes back in the direction of the underlying trend. And right now, Zoom, the short and intermediate term trends are higher. You still argue longer term we're sideways, but the shorter term trends have been up and up in a big way. And now the earnings trends are up too. So that's great.
Is it?
If you
Yeah,
own
I don't know.
speculative
I think it's really just a positioning thing. I don't think anybody gives a shit about the earnings or lack thereof of Zoom technology or whatever they call themselves these days. Zoom
Okay.
Communications. You think anybody really gives a shit about their revenues? Like, isn't this just kind of like a positioning thing? Like all these garbage Kathy Wood stocks? Like, isn't it rotation into that? And that's
No,
it?
some of these are great businesses. Some of the
Are
highest
they?
businesses in the market. Yeah.
I had
And
somebody tweeted at me. Hold on, you're gonna like this. Somebody tweeted at me yesterday. What did they call it? They call it garbageage. Was that?
That's good.
That was good. Was that what that is? Yeah, garbageage. I thought
here's
that was
the
so
thing.
good.
You could talk shit about Snowflake and Unity Software, right? All you want. I would say those are some rock solid businesses. And I would say also that just a couple months ago, Palantir would have been thrown in this basket and talked about in the same way. So I think it's more that people are just stupid and don't do the work.
Yeah, well, I mean, you could say
There
what
are
you want
some
about
gems.
Snowflake. Snowflake fell 75% in a few months. And then what was this other Unity software blue chip that you're telling me about?
Because you have to let them go public, right? And dance for a while. Okay. Then you swoop in and buy it.
Unity, hold on, Unity
Every time.
software, this great business you're talking about fell 90%.
Yeah, dude. So did Palantir. What's your problem?
That's
so did
high
Amazon
quality right
20
there.
years ago.
High quality.
Bro, Meta was in a 75% drawdown a year and a half ago. Like, what
That's
are you
right.
talking about? The drawdown doesn't speak to the quality of the business. It speaks to the severity of the bear market.
Or the
I
severity
am
of the bull market.
embracing Strazza. I am embracing the garbageage here. I am
It's
in
not
the
that.
party. I'm joined.
You know, I've been writing about this, and I said they're going to call it the trash trade. They're going to say all these stupid things. But then you know what's going to happen a year from now? Everybody's going to be talking about Kathy Wood again. Her face is going to be on every freaking magazine. She's going to look 10 times smarter than all of you. That's what's going to happen. So I'm here for it.
Can I haven't gotten a verdict on the garbageage as a you don't think that's great?
Oh yeah.
No, you're not embracing it, Strazza?
I plan to own some of these companies.
He's
for a
taking
very
this
long
very
time.
personally, Spencer. You see this? Like he's like he feels like since he's long, like they're like his babies, you know, like he feels
No, they're not
bad
my
talking shit about him.
I'm basically out of Palantir. Okay, so I don't have babies. I don't have any babies. There's no babies in my portfolio. They all get kicked out eventually, I feel like. So
Right.
I do think though that some of these speculative listen, Zoom is not the one that I'm talking about. Let's be overwhelmingly clear about that. Zoom is a trade and nothing more. I would imagine if they're lucky, they get bought out one day by one of the major techs and they get folded in.
Can you throw it up one more time there, Spencer? Throw up that Zoom.
But there are stocks in the ARK funds, right, in this basket of speculative growth stocks that everybody talks crap about, that really excite me. Just really get my juices flowing. All right. Zoom's not one of them, but
Is this
there are some in there.
Is this
Huh?
the old Andy Dufresne pattern?
Dude, Upstart and Affirm, I was looking into these two guys. First of all, just pay attention whenever you buy anything on the internet. Just look for that little Affirm logo. It's almost always there these days. Like, these businesses are absolutely booming. And I would also say some of these are just inherently bull market stocks. They're good economy stories. You feel me? Like buy now, pay later. Perfect example of that. So I think there's also this theme of some of these stocks actually do a lot better during like a booming economy, and there's tailwinds from that as well.
Is this the Andy Dufresne pattern?
I don't know. This pattern is the pattern that I'm seeing over and over and over again, and that keeps working. And frankly, the first one to come out of this pattern last year was Carvana, right? So if you want a roadmap for like how these patterns are playing out, go look at Carvana. It did it a long time ago. Now, JC, one that's doing it this week. Look at Teladoc, TDOC. Notice, it's the same pattern. Guess what? I added some exposure to another one that is printing this very same pattern, like right here, right now, this week. SolarEdge, SEDG, same pattern. What am I talking about when I say the same pattern? It's a stock that is an absolute just laggard, right? Nasty downtrend, testing its all-time lows, breaking and shaking through those lows, and then rocketing higher and scooping back above that major polarity zone, and the squeeze is on. And look at what some of these stocks have done after they've printed that little hook higher, right? And I think SolarEdge is next. I think solar energy is very exciting right now.
I will ask again, is this the Andy Dufresne pattern in Zoom video?
I'm not sure. You got to ask Kenny.
We'll ask Kenny. Kenny's here.
Shall we?
Yeah, sure. Kenny, you ready? I hope so.
It's been a long time coming. They ain't come from my cloth, they tugged it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Oh, Mr. Kenny Glick, how are you, my friend?
Andy Dufresne it is.
Classic Andy Dufresne pattern, just like Edwards and McGee drew it up in the 1940s. Am I wrong?
Before who?
Who? Who? Did they play for the Jets?
Before we go any further, Strazza. He's right on. He's right on. He was on this. We were on this last year with the path coming out of the down. Path was the only one that really didn't explode to the upside, but Sedge, exactly. We're on the Sedge from a couple of days ago.
Ooh, the Sedge.
Strazza is right there, and the Zoom is exactly the Andy Dufresne. That's why we gave it with you. We gave it with the Roku stocks that I despise. I don't even understand why Roku exists as a company, but here I'll show you some. Here's it. The Zoom. The Zoom today was an amazing buy already, but here's your Andy Dufresne. So basically, it's just long term, just grossness makes that turn. And in this market, when they make the turn, the stock doesn't go up 10%, 20%. They double. I mean, this is ridiculous. We're in I think the ninth circle of hell of the market right now. We're not even dashing for trash. We're underneath the barrel where the muck is and the roly-poly bugs and all the weird stuff. That's what we're buying. 35-cent stocks that are breaking $3 are going to 20. So, I mean, it's one after another. Yesterday we had something called Xena. Drones got hot for a couple of days. I mean, look at some of these charts. They went from 52-week lows to all-time highs in the matter of days. So it's ridiculous. But you know what? If this is the game we're going to play, I'm going to keep playing this game because that's what we do. We play the game. I mean, look at some of these charts. The stock just broke 11 this morning. It was at 16 already. It was $1.40 3 days ago. This is the environment we're in right now. So embrace it. And, rock it. Just remember, you got to dump these stocks every once in a while. And, yesterday I dumped and went short, and I got freaking annihilated by this one. QMCO, Quantum Corp Equity. I sold it pre-market. I said, hey, you know what? Looks like a good short. I got annihilated on this thing. I lost 5 points in about 3 minutes. It was absolutely insane. So it's still dangerous to short these stocks. I mean, they're all gapped down today, but you know what? I'd rather just sell them. I am not trying to short these stocks right now. because, man, I tried some QMCO short. I tried the QUBT short, and I got lit up. So there's still plenty of buying going on there, and still, very dangerous to go short anything right now.
What's popping this morning? Is there anything that's on your radar to potentially short?
Oh, yeah. Well, no, I've already bought Zoom. So, again, you give me a stock that's gapped down on earnings, you break the blue line, I'm in. So, institutional money line still working, your favorite. Ooh, my chart's just...
Oh, institutional money line.
Institutional money line action.
Who's this
so, again,
guy?
not a fan of the Zoom. I mean, the only reason kind of Zoom is interesting is that it is Americana. We don't like conference call anymore. We Zoom. So there is something there. But I assume that 2 years from now, somebody might come out with something bigger, faster, and stronger, and Zoom will just go away. Just like Roku, I think, won't be a company in 5 or 6 years. I don't even know if Zoom will be around. But that doesn't matter to us. We're just looking to get paid. And when you got a downtrending stock pre-market and it pivots, the biggest pivot there is the money line right there at $81. And again, if you get the faux show bro underneath the VWAP, so fake out, shake out, here comes the break. So faux show bro, and you're on your way to a nice day's pay. And, now you got some ammunition to play the ridiculous names like the Xena Warrior, which is just, it's absurd. It's absurd that this stock was $1 and it hit $16.75 this morning. And again, trading is not only just 24 hours. It seems like a lot of these stocks, people are just waiting to wake up at 4 o'clock in the morning and they rip at like 4 in the morning. I don't know who these maniacs are, but there's plenty of action. But there's a lot of other stocks. I mean, normal stocks. You could look at Dick's today. How you doing? Big gap. I'm looking to short, obviously, but give me a stock that's gapped up big. I'm looking for a reason to short it, but it's just so dangerous to short stocks right now because they're not even pulling back. They're just gapping and going. And if you don't time it right, you're just on the wrong side of this trade. So, a lot of earnings today. Abercrombie and Fitch the other day, this came out. So another monster from underneath the VWAP. This is a $150 stock it's up 20 points since the VWAP break, and it's ripping right now. So this is the 1 minute multi-day VWAP reversal trade. Just so much action. And again, everybody likes to go back. If you've been trading as long as I have, oh my God, this is just like 1999. This is better than 1999 by far. There's more action, there's more stability, and it's just more accessibility to these names. And it's better than 1999. I never thought I was going to say that, but this is the greatest trading market I've ever seen. There's action every day. And, when you're seeing stocks double, triple, quadruple, you and I, we understand market mechanics, but going back to the historical, returns of the market, if you made 8 to 12.5% in a year, you were a rock star. 20%, you were Warren Buffett. Now, if stock's not doubling in 3 days, you're a loser. So it's just absolutely insane, this environment we're in right now.
Spencer, can you throw up this chart here, please? So Kenny, this is it's going to be slide 3. So Kenny, you like the long dicks?
I do.
Yeah. Short dicks is just not the way to go here.
No.
Up 10% in the pre-market. Long dick wins again.
It's another monster trade. I mean, you know what else is? Speaking of dicks, you got Deckers. You ever see the stock Deckers?
Yeah, because they got those shoes. They got the what Strazza knows. He wears the girls' shoes.
Yeah,
no, it's not the Uggs. They got another thing.
Oh, really?
No, they have the Uggs, but don't they have like a new kind? Every man should have.
I'm not sure, but it's one of those stocks. It's like the Eli Lilly of shoes.
Here it is. Olukai.
Oh, is that what it is? It's absolutely. They're just certain stocks that just go up.
Island Boy Flippers. Strazza, Chief YOLO Officer.
Oh my God, Island Boy, stop it. Let's buy some.
Dude, the fact that the Island Boys are Cuban makes me sick. Like they're just giving Cubans a bad name.
They're giving humans a bad name.
They're giving humans a bad name. Touche. Touche.
Awful. But hey, listen, guys, if you've been sitting with me and I'm not going to say long and suffering like a Jets fan, but if you're in Rambus, we're starting to get some upgrades here, people. We're only 20 points away from the monstrous breakout that I think gets us to $120 a share. So speaking of Andy Dufresne, this was the biggest Andy Dufresne up until Carvana showed up. This was a 10-year Andy Dufresne, if you guys have been trading as long as I have. This is Rambus. And I'll show you a chart. This is a monthly chart on Rambus going back 20 years. So if you've been around, This stock was the high flyer before high flyers. It was Qualcomm, Rambus, and then of course Taser, if you guys remember that. So you had Research in Motion, you had Rambus, you had Qualcomm. This thing went dormant for over a decade, and then it ran to basically 80, and then got smashed right back down to 37.50, which is where we bought it, and we've been in ever since. So now we're starting to get over that 55, over that 60. This is a company that it's a subtle play on quantum computing. It's a subtle play on AI. This helps the computers move. This helps the computers work. This is like a Micron technology that a lot of people don't know about. And if this thing breaks over $76, here's where, this thing could easily go back to all-time highs, which is around $120. I love it. I bought more the other day. This is one of the only stocks I've owned long-term. I'm buying more. I love me some Rambus. I think we're going to go back to this 127, and if we break 127, I'm holding on to my idea that this is going to be a $250 stock within the next couple of years. So Rambus, baby, somebody upgraded it, which usually doesn't get me excited because that's usually that's telling us they want to sell out of it on their upgrade. But I'm liking the fact that this thing's flirting with 60 again.
Can you just rewind for 1 second?
Yeah.
I know you've been on this Rambus train for quite some time. Is there something specific that's got you going other than just a massive Andy Dufresne?
Oh, it was the massive Andy Dufresne, and plus I just like the space. This is just, like I said, a subtle. It's like Micron Technology's illegitimate stepson. So and now again, a lot of people don't know about it. So if it ever becomes the Rambus of days of yore, this thing's going to 120, and like I said, all-time high break. Probably going up another, 60 points from there. 120 gets you 180, 180 gets you 250, especially in this market. If we keep this trend going and this bull market continues to power higher right into the Trump presidency and blah, 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 and this, that, and the other thing, I'm loving me some Rambus. And again, all-time highs beget more all-time highs.
We know that. We have the math. People don't like to think that. They're like, I got a tweet the other day. They're like, oh, JC, you love buying new all-time highs.
Yes.
Yeah, I've done the math.
Yeah.
Clearly you have not.
Yeah. And you want to see, look, not every stock is going up. So if you guys like disasters, Sava yesterday, SAVA.
Oh, yeah.
Again, if you're just trading VWAP, you already got a little buying going on right now. Yesterday, I had a little buying. Look, I don't know about these drugs. And if you start talking about efficacy and pipelines, I have no idea. This company was left for dead 5 times because it was a scam. And then it wasn't a scam. But every time this stock dies, somehow it comes back. So I got my eye on Sava for the next couple of days. But if it ever goes back under 250, it probably will eventually go to 0. So keep an eye on the Sava. Yeah, awful. But I like disaster stocks. So
yeah, me too.
Oops, I just
broke.
Right,
thanks a lot, Kenny.
All right, I'll see you soon.
Kenny.
Later, boys.
Hit thebid.com, guys. There we go. All right. Shall we?
Yes.
Is Ari here? Ari's here, right?
For this moment for all my life.
Let me make sure we have. Yeah, Ari, your camera's off. Turn your camera on for a second. And then
I've been waiting for this moment. Ari Wald.
Right.
That's in the business.
I'm just gonna bring it on. I'm not sure his camera's on, but we'll see what happens. How about that?
Let's do it.
That'll be fun.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Bring him out. Bring him out. Come on, Ari.
Wait, where's my camera?
There he is.
No.
Oh.
Where's my camera?
I don't know.
Ari, it's better this way, right? You see? We don't want to look at you anyway, buddy.
You want me to reset?
Wait, well, we can still hear him. So
Ari Wald, the voice of God, the John Facenda of technical analysis.
Hold on. I'm going to leave and come back.
All right. Leave and come back. So Ari Wald, he was the chief market technician at Oppenheimer. He might maybe now chief strategist at Oppenheimer. I don't know. We're gonna find out now. Ari, somebody whose work I've been following for a long time. Somebody who, when we talk about how like we stand on the shoulder of giants, and we learn from our predecessors, and we talk about guys like Charlie Dow and Edwards and McGee, Ralph Acampora, and these guys, that came before us. There there are people that are in their prime that are working today and are contemporaries that we can learn from as well. Like, it's not just about learning from the oldest folks or folks that are not with us any longer. Rest in peace, Alan Shaw. About learning from those that are around us, and Ari Wald, ladies and gentlemen, is one of those. Ari
Wait.
Wald is giving us reason to short Zoom, right? Is that what we're doing here? Are we shorting Zoom?
Wait, Ari,
I think
can
so.
we hear you?
Can you hear me?
We hear you. We just don't see you. This is weird.
Don't worry about it, Ari. We'll podcast this. This is more of a podcast situation. It's all right, right?
All right.
No, we're good.
Okay.
You can hear us okay, though, right?
Black
I can
screen
hear
of
you
death.
loud and clear. What a shame.
That's all right. We'll have the
Here.
phone the phone emoji.
Yep, I got it. 1 second.
Mr. Ari Wald, why don't it's Thanksgiving week. We are in some of the strongest times of the cycle that we're in right now. How are you thinking about it?
Well, hey, JC, I think the market is behaving in a manner consistent with a bull cycle that should continue into 2025. And so for us, seasonals are always secondary confirmation. I would never tell any of my clients to invest just based on the tendency to rally in the November, December period. But when our indicators are supporting that roadmap, it does add to our conviction here. So, the market is rallying in a time of the year it typically rallies. And so, I think it's just added confirmation that this bull cycle does push into the new year.
Can you talk about the fact that we just had the most amount of stocks on the New York Stock Exchange and the NASDAQ for that matter, making new 52-week highs than we've seen this entire cycle? And how often does the market peak with peak breath? Like, how do you think about that?
That's a great point there. What we found in looking at that net new highs, I think at 371, more new highs than new lows. That was the highest since May of 2021. It was the highest of the cycle.
Yeah, but hold on. Stop right there. You're talking about net new highs. And isn't it somewhat disingenuous to look at net new highs when these stocks are nowhere near new 52-week lows? Like, shouldn't we just be focused on the absolute new highs? Like, I understand, like, net new highs, it's evidence of, I understand all that. But these things are nowhere near new 52-week lows. So, like, you're subtracting, right? Like, how do you, before we get into, like, the circumstances, how do you think about that math right there?
Obviously, you gave this some thought. I think it's an honest way to look at it, because it would be capturing markets, let's say, where they're a split market. Let's say it's a market where there are a lot of new highs, but there's also not a new lows. So we understand that there isn't a lot of new lows here, and it's being captured in the net new high figure here. I think the point is that market breadth is strong here. That's the same thing with advanced decline line. Why don't we just look at advancing figures every day? Because we want to look at advancing net of declining to show the truer full picture. Is my take on that. And we did some studies on those very high readings. What we found is that it does characterize a bullish market environment, that the forward returns 6 to 12 months out are relatively stronger than just the imminent 1 to 3 month forward returns versus the all period average. So it's not that it's necessarily a tactical signal. It does often kind of capture near-term overbought conditions, and we all know that bull markets don't go in a straight line. But what it does argue for is that investors should be looking to buy pullbacks because historically major market tops do not occur around such broad-based readings. Now, to your point, as far as what we also looked at is, are we getting to this point where it is as good as it gets? Where have we reached peak breadth? Where all capitalizations are working, all styles, and the point is not to lead the leading indicator. That will typically occur several months, often 6, 9, maybe even 12 months ahead of a major market peak. And so we would expect several months of internal deterioration to occur before the S&P peaks. And so we're not yet at that point.
I mean, you like to do a lot of studies. How often has this happened, Ari, where the peak in market breadth coincides with the peak in the overall market?
It happened more frequently in the 1970s, in the secular bear market periods, where markets traded more in a range-bound manner, that by the time you got your strength and peak breadth readings, you were typically closer to the upper end of the range. So I guess in a range-bound market, it wouldn't give the same leading tendency. In a trending market, in the secular bull market periods, typically it had the leading tendency more often.
In 2021, breadth peaked in February of that year, right? So Chinese internet, biotechs, all those ARK funds, all those things peaked at the beginning of 2021. But the S&P 500, NASDAQ, they didn't peak until the end of the year. So we're talking 9-10 months until it ultimately peaked. And we also don't know if we are at peak breadth. We're just at the highest levels we've been this cycle. But that doesn't mean that we can't go higher. How do you think about it? Like, is it even worth thinking about whether that was peak breadth or not? It's kind of hard for things to get any better, isn't it, Ari?
Right. Well, let's see. Stocks above their 200-day average peaked in this cycle at around 65, maybe got up to 70%, upper 60s on the NYSE.
Yep.
It got up to 90% or close to 90%, upper 80s in that 2020 into early 21 period. So it can get stronger, and especially with small caps just starting to break above levels from 3 years ago, we might be, for over a 1 to 3 month basis, it could get a little bit better. And we're not, we could be approaching as good as it gets, but not necessarily there imminently. What's the interesting point, and I think I've been on this show before, JC, talking about a sector culprit. And again, it's this idea that market breadth typically narrows into a major peak, and typically you have very concentrated weakness in a particular sector. One sector already down year over year, 20% on a year over year basis. We looked at the period of time between as good as it gets and the sector culprit. And what we found is that the momentum factor typically outperforms in that period. So while conventional thinking would be that, let's assume that we are at as good as it gets or approaching as good as it gets. Many would think, well, maybe I should sell the most extended stocks out there. What we found, it's the exact opposite. You actually want to sell the stocks that aren't participating in this market, that there's relative risk and relative vulnerability in those relatively weaker stocks. That actually, this is the point of the cycle, assuming that we're closing, nearing as good as it gets, where the bifurcation actually even begins to become more pronounced. And so again, that's just our, of course, we are momentum investors. We advocate for owning relative strength. And that is just a study that we put together recently showing that this is a time of the bull cycle where momentum should continue to outperform. And it is coming off new relative highs.
When you look at something like technology, Mr. Ari Wald, and you study every bull market in history, and I know for a fact that you have, you will find that technology is a leader and an outperformer in almost all of them, right? And, large cap technology has struggled, little struggle city in large cap technology. So my question to you, technology was actually down in the third quarter, despite double-digit returns almost everywhere, which I know but for the audience who may not have looked, my question to you is: do you look at that as a negative for the market that technology has underperformed so consistently for so long at the large cap level, small cap tech underperforming for 18 months, or are you impressed with the resiliency in the other areas like financials and industrials and some of the areas that are pushing this market higher, communications, consumer discretionary, Is it like a worry about the technology more, or impressed with the other strength?
Well, I'd have to push. And I missed some of your question. My audio kicked out for a little bit there. I caught the end of it, but I'd have to check again. Over the last
Technology underperforming, Ari. Technology underperforming for, I mean, think about it on a relative basis. Technology peaking this summer, but you're seeing relative strength from financials, industrials, consumer discretionary, communications.
All right. Well, in the technology sector, S&P is up 39%. Over the last year, S&P is up 31%. So it's outperforming.
Tell me about the last.
So you're picking your time horizons over the last summer. I mean, listen, this is the point about technology that we've argued about all along, is that the steadiness is underappreciated. It has not been a one-line higher on an absolute nor a relative basis. The absolute performance stats nowhere close to where they were in the late 1990s there. It's been in a much steadier move. It's underappreciated by Wall Street. I want to make sure it's not underappreciated by you as well, JC, because there have been checkbacks along the way. Even if it has lagged over this very short-term 3-month basis, that's for all the more reasons why we think that long-term outperformance does continue.
Yeah,
because it has allowed these other sectors to also lead and take turns driving the market higher. I would argue on a relative basis, support levels are intact. We've seen some inter-sector rotations occurring where over the summertime period, you had a very mixed software industry with very broader strength in semiconductors, and now that's flipped. Now semiconductors are taking a breather, and you've seen that rotation move back into software. So I think the intersector rotations within technology, I think the long-term steadiness, I think the fact that the relative support levels are still intact suggests the sector can continue to work for a long-term period. Now, with that, yes, industrials and financials have been standout areas of leadership. And I think that speaks to it being driven by the right areas of the market as well. And so I'm encouraged about that. I think it's risk-on leadership, and I think those 3 sectors in particular are our top 3 sector ideas. I don't think they necessarily have to drive the market higher at the same time, but I think they could take turns driving the market higher, which is to say, even if industrials and financials were to pause, I think technology is there standing to benefit and pick up some of the slack.
I like what you were saying there. These are words that are not used often by humans. Inter-sector rotation amongst industry groups within a sector. You nailed it. As money has come out of semiconductors, it hasn't just disappeared and gone into staples. It's going into software, right? How bearish is that? Negative alpha for large cap technology over the last 18 months. Not a problem. Not a problem.
Over the last 18 months now, we're going?
18 months. Negative alpha for technology on a large cap basis, S&P Tech. Negative alpha.
Yeah, I mean, listen, the Mag 7 is still working.
Am I cherry picking time horizons here, Ari?
A little bit, no. So, yeah, XLK relative to SPX, there's been some moderation in that trend. I would say it's still above its 21 breakout level. So it's still moderation, consolidation within what was a big breakout in 2023. And so I think I want to give that a little bit more flexibility to ultimately resume to the upside. But yet it has been more range bound, big cap tech relative performance for sure. Which way does it?
I got one for you. I got one for you. Throw up, you could see the screen, right, Ari?
Yes.
Yeah, throw up slide 3. And this negative alpha that we speak of over the last 18 months and certainly the underperformance since the summer has come at a time where it took 25 years to get back to those dot-com bubble highs from 24 years ago, and the underperformance started immediately after it got there for the first time. Do you think that this is a coincidence, Ari?
Yes.
Wow. You see how Ari doesn't let me get away with any shit? You see that, guys? Are you guys paying attention? I told you.
Wait a second here.
Zoom in, Spencer. Zoom in.
All right.
Zoom in. No. The next chart, Spencer.
Oh.
So what I see there, okay, let's say I'll play
coincidence.
Okay, so there's this big resistance. No, I get it. I get what you're saying. So you're at this big resistance level. You've paused right here, right? What I want to be open to and what I think is playing out just based on my read of the tape, because I guess that's the key thing here, is that from the same starting levels, and you'd have to use a little bit more history using the S&P 500 cap-weighted index, which has history going back to the early 1990s. What you'll see is that from the same starting levels around from 1998, the move in technology from 1998 into that 2020 high over a 2-year period, it took the same amount of time to get there. Really, even from 2009, let's say even I'll give it 2013. This time around, it took 10 years what it did in a 2-year period from 98 to 2000. So yes, we ran up to that level. We've paused there, but we're doing so in a manner that is much steadier. It was not a parabolic move into that level that then crashed. And so for that reason, let's use some technical jargon here. Maybe a cup and handle pattern, JC, where you rally into resistance, you consolidate below that resistance level, and then you break out to the upside.
Go back to that long-term chart, Spencer, so people can see what he's talking about. Go to the 25-year one. Dawes was talking about how I love this chart. It's not so much that I love this chart. I mean, this is the largest, most important sector in America, and it's been underperforming since it got back to those 2000 highs for the first time. It's hard for me to argue that that's a coincidence, Ari. So what Ari's suggesting is now you get the handle. Now you get this consolidation.
And not only that, if you were to have a little bit more history on this chart, what you'll see is that from the low point in 2013, which I guess maybe that was the start of the big rise, that was the starting point in 1998. And so I'm saying we've covered the same distance over a 10-year period as we did in that prior period over a 2-year in the final 2 years. So this has been a much steadier move into that resistance level as well. Which gets back to my point. Why should I expect a bubble-like collapse without bubble-like returns?
That makes all the sense in the world. I don't necessarily think that this is a bubble. I'm mostly just interested in the massive underperformance and the negative alpha over 18 months in the America's largest sector.
Massive?
Talk to me about
massive? Well, I mean, let's
negative alpha over 18 months for the largest sector in America. Yeah, that's pretty massive. No,
I don't know if it's massive. It's looks like a little bit of a breather. I mean, that weakness seems to be in proportion to the strength going into it. That the breakout above that 21 peak is still intact, and really a small, minor setback after what's been a strong run over this decade-long period. And I think it would be reasonable to have some consolidation along the way. So I don't know about a meaningful degree of underperformance. I mean, it's generally probably showed positive performance within that. It's just the fact that there's been some other areas of the market. And that's another key difference as we think about the spread between tech and everything else. So, right, it hasn't been outsized returns in tech. It's been how poorly the rest of the market has done over that period. And so why we've continued to say that the case for convergence is catch up rather than catch down. So over that period, tech hasn't broken down, coming off new cycle highs. It's the fact that we're finally getting some bullish catch up in these other areas of the market that have performed so poorly over much of the last decade there. So I think, again, this is very bullish market action that we're describing and looking at.
I just brought up a chart of the equally weighted consumer discretionary index making new all-time highs. One of the arguments that the perma bears love to make is that this strength that we've seen in consumer discretionary does not count because Amazon represents 22%, Tesla another 14%, Elon and Trump besties and the bromance and the whole thing, and it doesn't count. But on an equally weighted basis, where Amazon and Tesla and these other names are not even in the top 10 weightings, they're irrelevant, really, also making new all-time highs. Number one, Ari, can you speak to what you're seeing in discretionary and what it means to you? And number two, can you address this thin market being led by too few names argument?
Yeah, that turn into discretionary, and if you were to look at that on a relative basis, I mean, on an equal weighted basis, discretionary has been an underperformer for a number of years. So this is another sector that is, has some room to run too, if we were to see it. I mean, it's still, I would argue, some work to do on a relative basis. It has moved back above its 200-day average. And well, yeah, what was I'm sorry, it was
The
a
question,
question.
can you speak to the this is a thin market being led by too many names and the bubble's about to pop?
Oh yeah, I mean that's just bearish rhetoric. There's just
And then hold on, I need to call you out on something. When I asked you that question, you gave like that sigh, like the right? Michael Saylor does that every time he's asked to explain Bitcoin. Like, have you seen that clip where he just goes and then he goes on to his spiel? You just did that. Just an
You know what?
FYI.
I'm apologies because I'm reading Spencer's. I'm like turning off the camera icon. I'm trying to do two things at once. It was
I'm just
nothing
saying, you're
about.
acting a little like Michael Saylor. Just saying. Okay, talk to me about how thin this market is and how too few names are driving it.
You caught me not paying attention. My bad. No, I don't see any validity to that. This is a much broader tape than I think bears give it credit for. There's been rotations within this. There's been rotations within the Mag 7. I continue to bring up. You notice how we continue to change the acronym. We're adding letters. We're taking letters off. We just get rid of FANG altogether. And from FANG Ma, and now it's Mag 7, because there's even rotations within those big names, and all along there's all these other, now you got small caps breaking out to the upside and mid caps, and you got you got value coming off new highs, growth coming off new highs. So it's this everything rally that I think there's not much validity to this market being led by very few. And again, it's a difference between absolute participation and relative leadership. Yes, when large behemoth mega cap stocks post strong returns, just mathematically speaking, there's going to be fewer stocks outperforming on a relative basis versus a cap weighted benchmark. That's just simple arithmetic math. But that doesn't mean that there's fewer stocks actually participating. To me, what's more important is absolute participation. Rather than, large caps leading. We've seen this before during prior big secular bull markets. Throughout the 1980s and 1990s, large caps led for big chunks of that. That means that there was fewer stocks outperforming, but still it was a very broad-based move because small caps were still participating in absolute price terms. So again, the importance is people like to kind of change around what they're talking about. Yes, it might be narrow leadership. That's not necessarily a bad thing as long as there's broad participation, which there is.
When we talk about consumer discretionary, we're talking about how it's been such a massive underperformer for so long. I would add to that, not only has it been a massive underperformer, it looks like a 10-year top, massive 10-year top. So the question that we posed this summer was, if this bull market has legs and if this massive top completes, then bull market canceled, as far as I'm concerned. So the weight of the evidence this summer was suggesting that this bull market still had legs. So we reverse engineered that. And if this bull market did in fact have legs, then they got to buy discretionary. It's just what it is. And sure enough, they're stepping in and buying discretionary. You could see that pop on a relative basis. Can you speak to that chart and what this group means to you as far as the bull market and the legs moving forward into next year?
Yeah, well, we're kind of moving back and forth, and even I'm looking at it now in price terms, also moving above its year 21 peak. So this is a fresh breakout to new all-time highs in price. We got relative moving back to the upside, and again, that speaks to the underperformance in recent years. I don't think there's anything about consumer discretionary in particular. It is typically considered a cyclical sector, so when it outperforms, typically occurs in a rising market, especially when it occurs. And here, be careful. You're looking at, this is the cap weighted XOY versus SPY. Sure. And so you got these big names, Amazon now moving above its from its year 21 peak, Tesla starting to reverse its downtrend from a couple of years ago. So yeah, that kind of speaks to those big discretionary stocks and the fact that they're starting to turn up.
All right, last one. You could take this down, Spencer. So the last question is about the election. You know, when you think Donald Trump, landslide victory, bad for China, bad for solar, and seems pretty consensus to me. Um, any thoughts on taking the other side of that positioning, which I think is pretty concentrated there on everybody just assumes Trump's going to be bad for solar in China. I've been watching very closely on looking to take the other side. We're already making moves in solar, not quite in China to the degree that I'd like because I haven't seen it yet. But solar starting to move. Any thoughts on these contrarian post-election trades?
Well, you're to speak to a momentum investor. I'm not much into making contrarian calls. I'll make
Yeah,
contrarian
this is
calls
the last thing that you
at
would
the
do.
market level. Yeah, actually, in fact, one of our long-standing views has been U.S. over the world. I've been, every time I've given a chance to say it in my 10 years at Oppenheimer, I've been making saying U.S. over world, U.S. over world, and it continues. That
Yeah.
once again, even you're seeing China show some a minor turn. I think that speaks to some better risk-taking action in the market, and I think that speaks to why I think this is still a bull market activity. But the longer-term trend still favors the U.S. If you're just starting to turn higher 3 years into a cycle, I don't know. If this was the first year of a cycle and China was beginning to turn, I think it would make a little bit more sense. But just from a risk-reward basis, I think China is only a beta trade. You need a tight stop. I always think if those trends start to point south on me, can I defend it? And
Yes,
I
you
would
took the
defend the
words
U.S.
right out of
first.
my mouth because this is something that you preach, and I was about to tell the audience, and then you said it yourself. You have to be able to defend it on a pullback, and if these pull back, you won't be able to defend it, right?
That's how I think about it. Yeah, exactly. And for the solar, and here it has kind of I'm looking at the solar ETF. I don't know if that's the right proxy to look at, but if it was
It's not
basing,
terrible. It's not terrible.
not really basing anymore, right? It's coming off now in a third year into a bull market at a multi-year low. So I don't know. To me, that's I'd like to see more there. If it's a rising tide lifts all boats. If I tend to think this is a low momentum area. For the periods when low momentum really where you get burnt shorting low momentum is kind of start of a new bull market, big run ups in equities, and I'd love to see it. I'd like to believe that the stocks that I own would also do well and participate to a certain degree if we're in an environment where solar is really going to take off or low momentum is going to take off. But for now, I just see more attractive ways to allocate my funds.
Ari, I have so much respect for how much weighting you give to relative strength and momentum. You truly are, through and through, relative strength and momentum. And if they're not there, move on. Love that about you, Ari. You're very consistent in that manner.
There's different ways to make money, and you could fundamental, technical, trend following, mean reversion. My methodology is based on relative strength, so I have to stick to my methodology. If I didn't, you'd call me out and say I wasn't doing what I'm saying. So that's, I think clients appreciate that I'm disciplined by it. And I don't know. I always kind of talk about these differences between fundamental value and price value. You could buy something that's kind of beaten up and contrarian if there's fundamental reasons to do so. I just don't have that's not what I do. I think it's tough to do that just based on a price chart without tight stops. You can do that if you can, all right, I think there's some bullish divergences forming here. If I know I can close this out, if it breaches, $33, whatever the level is, okay, there's something to be said there. But if I'm going to have an army of these private wealth brokers calling me up and saying, "Oh, what do I do now? What do I do now?" Well, I told you to put a stop right there, and I don't want to deal with that.
No, I listen. There's no wrong way to make money. We all have our strategies, and we all have our systems, and we all weight different things in different ways. We all have different time horizons and objectives, and I think it's important to remember that. Ari Wald, best in the business, my friend. I truly appreciate you being here. This is always fantastic.
I'm going to get my AV set up next time. Thank you for making it work. Happy Thanksgiving. Happy New Year. We'll talk to you guys in 2025.
Happy Thanksgiving. Saquon Barkley, Ari. Woo!
Oh, my man.
What a
MVP.
stud, dude.
All right, see you.
What
All
a
right.
stud. See you later.
Oh man. Yeah.
Seriously, Saquon Barkley. Wow. Ari Wald, the Saquon Barkley of technical analysis, right there.
People are saying it.
That's what people say. Yeah.
All right. It is 9:38. Whoa! I didn't realize how late it was. Okay.
Time flies when you're having so much fun.
Yeah, time does fly. We are open. We've been open. I totally did not even realize that. Steve has been dropping charts in the deck these last 15, 20 minutes. So I know you have things that you want to hit on before.
Yeah, I want to talk about China.
China.
We haven't talked about China much this week.
China.
Granted, the week is 2 days old.
Which is our fault because they've been in the news every morning. So slapped them with a 10% additional on everything across the board. And I think the market was more than ready for this. And they sold the rumor. Now they're going to buy the news. I think this is probably it for now. And if you look at something like, so check this out. The rounding bottom is still intact, right? It's working on this, textbook trend reversal pattern. We had blowout momentum readings on any momentum indicator you want to pick. A month ago, 2 months ago now, right? We surged higher, really had a momentum thrust on the short-term rate of change indicator, highest momentum reading in history on the daily RSI 14. Looked like we were coming out of this base, but oh no, couldn't get it done. Couldn't stick the landing. Not yet. Needs more time. Pulled back, and we've retraced 62%, a key Fibonacci number of the advance from the summer lows. I think this is a very, very logical place for China to dig in, find its footing, and reset that little intermediate term uptrend that's underway. The VWAP from the all-time highs is coming in just above current prices. This is the China Internet Fund, KWEB. And then the VWAP from the May high, so the first half high from this year, also coming in right around here. So I think this is a big level. If I can just get a couple green candles, I'm going to have so much more exposure. And Baidu really stands out to me right now. I'm going dumpster diving in the China. Do we have the top on the Baidu? Baidu just had earnings. They missed. Mind you, this company, I don't know, 20 billion in revenue a year. They're massive. It's the Google of China. They make a ton of money. The company trades, JC, wait for this, like an airline stock, 10 times earnings.
Is that what airline stocks trade for?
This is as cheap as it gets on a price to earnings multiple basis. For a company that's growing and a huge tech, behemoth like Baidu is, this is absolutely ridiculous. This is not going to be a top. I don't think Baidu's going to zero. I think it's going to dig in right here. I think it's a great vehicle. I think you leg in, right? You start to scale in. You start to scale in right at this base breakdown level. You go from there. You could drop some VWAPs. But they had earnings 2 days ago. Knocked the stock down. Couldn't break it down from this massive top, though. So then what's going to do it? The tariffs news can't complete this bearish pattern, right? Bad earnings can't complete this bearish pattern. So now what? Do we have the top? No top.
You have the Baidu? Throw it up.
Topless. We're topless.
No, I don't have it.
Yes, you do.
Oh, Maron. It's in the deck.
Oh, Maron. Maron, I mean.
Let me help you guys.
This is amateur hour, Strazza. Can you believe this?
They don't pay attention to me, JC.
I pay attention to you, Strazza.
Just go and get this chart right on my Twitter. It's right there.
I know. Everybody has it. Come on, Spencer.
Yeah.
Jeez Louise. Throw the chart up. You got to give the people what they want, Spencer.
Ugh, sheesh.
Don't you understand? Tell them.
There's so many charts in here
But
today.
we have ideas. We're looking at different vehicles here. JD looks spicy to me this morning as well. We've stayed away from the online retailers a little bit. I've been getting slaughtered in BABA trying to scale in and buy this accumulation phase and be in early. It hasn't worked for this one. TAL, EDU, the online education companies. I think they reassert their old uptrends. They were early cycle leaders for China. Tencent Music, TME. Really, really, really interesting stuff going on there. That's also been a cycle leader. Trip.com, the TCOM, looks different from all the other ones, trading close to new highs. I can't really say that about anything in China right now. And then the VIP shops. The VIP shops has this prolonged topping formation that looks like it's not going to end up being a top. So there's a lot going on in China. We have so many vehicles, so many ways to express a bullish or bearish thesis on this, high risk corner of the equity market. And I think Baidu is just a great vehicle right here. 10 times earnings, Spencer. Do you believe that? This is the Google of China. 10 times.
That's pretty cheap.
I mean, this company makes $20 billion a year. Top line.
There's a reason. You might say, Steve, there's a reason for that cheapness, but
crazy though. Really crazy.
Is that a lot?
Ever heard of a value trap?
It's my favorite.
20 billion ain't bad, JC.
No? Is that supposed to be like a lot?
20 billion ain't bad.
All right.
No, a PE of 10 is quite low for an internet company.
That's below JC's line though, the revenues.
Yeah.
This is any talk of revenues is below my line.
Yeah. We don't like making money over here.
Can I interest you in some Kohl's this morning?
I'd rather than be losing money as far as I'm concerned. I like it better when the fundamental guys can't wrap their head around the price action. Like, it's not like, oh, I don't like them or I like making fun of them. It's not about that. I like the positioning. I like when line go up and heads are exploding because of it.
I got some
like
price
that's what I like. No, is that wrong, Strazza?
Can I explode your head on some price action?
Please.
Can I?
I love it.
Can I?
Exploding heads.
Where are we?
Throw it up. The Kushnet. Let's talk about the Kush.
Shout out golf.
This is a special story, and this has become a very, very large holding for me in my long-term account. I'm gonna tuck this thing away. Okay, golf stocks have absolutely erupted past couple of days. I don't know why, but look at golf. Look at Amer Sports.
Cool? Is golf cool again, or is not? It's still not that cool,
dude. Golf has been going through a renaissance. It began during the pandemic, but it's only gaining momentum in terms of global growth. This right now is the trendiest sport in the world, hands down. Nothing comes close.
Golf is the trendiest sport in the world.
It is. I don't think I don't think anybody who knows, I don't think would argue with that. Like, it's been a thing. It's been a trend. People have been talking about it. It's an Asia story. So naturally it's a growth story, right? It really is an emerging Asia story. What they're doing over there with the game of golf and really the hobby of golf blows my mind. It's so cool. And golf is built different from other sports. They just milk your pockets, this hobby. There's always something new to buy. You got to do it, whether it's clubs, balls. The apparel has gotten completely out of control, right? All these trendy little new brands are popping up everywhere. These guys have a monopoly. They have a monopoly on golf balls. Makes up more than a third of their revenues is simply selling Titleist golf balls. They have the best golf ball. I would liken it to an iPhone. We've talked about it on here. I don't have to give my spiel again, but I think they have one of these special luxury goods that people feel that they have to buy. At least that's the way I feel. Talk to all my friends, my golfing buddies. They'll tell you the same thing. Grant came on here, told you guys the same thing. A monopoly on golf balls. They also sell cool brands like Titleist Vokey clubs, FootJoy, which is still dominant in terms of the shoe market for golf. And they have like Scotty Cameron putters and some cool stuff like that.
All right, so this is one of those businesses where they actually don't want you to succeed at the thing you're doing, because the more balls you lose, the more balls you got to buy.
No,
right?
I mean, they want you to enjoy golf so you keep playing more than anything. So yeah, but the ball selling is just such a slow and steady business to be in. For that to make up a third of what they're doing, I think is absolutely awesome. Then you have these little growthy kickers with the clubs and the new like Scotty Cameron putters and stuff. That's cool, but it's really an Asia story. About 40% of their sales are coming from Asia. I don't like the way that they break it out because I would like to see emerging Asia, but it's a lot. And that's exactly where you want to be. So in a market where you really have, at least my whole career, we've had two options to invest in golf. And that was Top Golf, Top G or Mod G, which is Callaway, and then Titleist, which is a Kushnet. This is the one by far. It's not even close. So this is the winner. And I think if you want to express a bullish thesis on the game of golf, which I'm having fun doing myself, this is by far the preferred vehicle. It also has a near 20% short interest and a 15 days to cover ratio. And it's trading at
MODG is the other guy, right?
What?
No. MODG?
That's a lot, 15.
Mod G is Callaway and Top
G.
Golf.
Okay.
Yeah.
Stupid. Yeah.
A monopoly on golf balls.
It's true though. It's true.
And the what are these communists that block all the M&A transactions? They're okay with this monopoly?
There are a lot of monopolies out there. Duopolies. A lot of duopolies.
It's about to be a bull market for monopoly businesses. Okay, so get involved.
It's always been a bull
And why?
market.
Because of the politics?
No, Spencer, it's been a rough 4 years for a lot of people. So get involved. Everybody's talking about it. Executives are all coming out and talking about how shitty it's been under Biden and how excited they are that they can actually make decisions and grow their businesses the way that they want to. People are
why
psyched.
is it? And then why is it that Democrats are player haters on M&A and then Republicans are not? Why is that?
I'm not in the position to answer that question. I don't know why people do the things they do.
I mean, the irony of it is we have a lot of monopolies in this country, or at the very least, duopolies, right? Google and Facebook control 90% of online advertising.
Well, believe it or not, in a true free market system, monopolies do exist and can thrive in certain cases.
Yeah.
This is way above my pay grade.
You see, you're like falling asleep over there.
No, I just
JC.
don't understand like why one group is like hates M&A and another group is for it. Like I just don't understand like the concept. Like why? Like one group embraces crypto, the other group hates it for some reason. Like
it almost sounds like one group is like pro money and the other group is like anti money.
It's really weird, isn't it?
You know, the more you say it, it's like, yeah, it sounds crazy when you say it out loud.
Isn't it crazy?
Yeah.
Like I don't know anything about like how this stuff works. These are just observations. You know, it's really strange, isn't it?
There's been a libertarian revival around the globe. So you're seeing free market policies kind of come back to life. Not just here in the United States, but it's happening in a lot of places. Interesting wave of politics kind of running through the globe right now. So I think it's good for business. Net. Like we were talking about it with what was it, Argentina yesterday. Look at what Argentina's market has done since this guy.
Wasn't the Democratic Party? Didn't that used to be like the Progressive Party, right? Do I have that right?
Dude, these words
mean now it's the opposite,
both
and now the
sides.
Republican Party is the Progressive Party.
I don't know if I would not say that, JC.
And the meanings of these words change over time. It's so confusing. If you go back and read like the history of politics in America, what Republicans are, what Democrats are, what they call them just over in Britain, it's all very confusing. Very confusing.
Yeah.
Patrick wants to know if we own enough energy.
Get Patrick on here. Is Patrick awake?
Bring him out. Bring him
He's
out.
here.
Get him on here.
Oh,
Yo,
what
yo.
is up, Mr. Pat?
I got one for you,
What's
Pat.
going on? So
Pat, are
what's
you
the
going
verdict?
to the
You guys on
are you
map?
going to the Miami Syracuse game on Saturday?
I don't know actually. They're playing here at the Dome?
They are playing there at the Dome.
I might have to stop by then.
How
I was
close
gonna
are
go,
you?
but it's family picture day here at the Parets household. So
You'd be lucky if you could watch the game, sir.
I'll
How
be
close
lucky
are
if I
you?
could
And I
watch
are
the
going to
game.
try to catch a Maryland game, Maryland Cuse game.
That's right.
Barclays.
How close
Center
are you
next
to the
up.
stadium, Pat?
What's up?
How close are you to Syracuse, the stadium?
To the Dome, like probably 20 minutes, 25
Oh, you're right
minutes.
there. Wow. Okay. All right. So I got one for you. I want to talk about this chart with Patrick. Throw it up.
Patrick, send over a bunch of charts. Wait, what is this?
No, I'm happy to talk about whatever.
Starting here. So this week's candle.
I'm so confused.
What are we looking at?
Wait, what are we looking at here? Sorry. Oh,
I have a
okay,
feeling
I got you. I
know
got
what
you.
we're going to look at, but
Pat called me a week ago. He's like, "Are you long? Are you long enough?" So this week's candle is brought to you by Hard Mints, just like all of the commercials on my YouTube TV.
Hard mints?
Hard Mints.
Those like mints with alcohol?
Yes.
Close.
Don't act like you don't know. Put up the
I
chart.
don't know what hard.
I
I
am.
swear to God, I don't know what hard mints are. Is it like really mints with alcohol? No. Hello.
so this
Maybe
one,
more
I mean,
puts in your alcohol. No, it's got nothing to do with alcohol. So this is Hims and
Hard
Hers.
mints? Are these penis pills?
Yeah.
Can somebody explain to me what's going on? I don't know what you guys are talking about.
you know exactly what's going on, JC.
This company is
Am
owning.
I right?
the
Is the
Penis
ladder?
market.
It's the ladder.
Yes,
Right.
you nailed it. Okay. Can we move on? Have you had your fun?
I swear to God, I've never heard that term. In my
Oh,
entire
hard mints. I get it. Hey.
life. I get it now.
funny
I didn't know that.
because
I
it's
didn't know that
big
that's what they're
stick,
called.
guys. God, for crying out loud.
Sorry.
I can't
didn't
even make a
know.
funny, subtle, inappropriate joke on here without you guys ruining it for me.
I didn't.
Steve,
It
is
was
this one
above
gonna
the-
fail too?
I'm not that
How
cool
many times
anymore.
has
I
this
used to be
tried to go?
cool. I'm not that cool anymore.
How funny is Michael Batnick, JC? We show him like the best looking chart ever, and he goes, "That's gonna fail." I think this breakout is real, Pat, because we talked about it, right? So we got long calls 2 weeks ago now. This was a straight YOLO trade, right? We're just long going for it. What were we in, like the 31s or something? Literally buying the breakout. We ran through it. We false started. You could see the stick from 2 weeks ago, blasted right back into the range, and it's going again, just like that, just like that. So
I would have
you
thought
can
it
only
needed
have
more
so
time to
many
recover
times.
there, but it just recovered real quick. I don't know if we can even call that a failed breakout.
There's like bullish headlines about these guys in the teledoc like every other day right now. There was one yesterday, Spencer might know about it. I saw it come through. It was great. Stock was up like 25%. They were talking about it on the CNBC. So breakouts in the book. Do you know what the headline was yesterday that was moving this in the T-Doc?
What was it?
They got like approved to do something or allowed to do something? Yeah. All right. I'm the only one paying attention out here. Okay. There was something. So
I didn't know people still watch basic cable.
we've talked about this, JC.
I know, it's very strange.
CNBC household, and I'll tell you why, because I've thought about this. Because I, unlike you, support our friends. Okay, I care about the guests, our friends of the show, people who come on. Because guess what? A lot of times, before or after they come on our show, they go and they do a hit on somebody else's show, and I watch them and I cheer for them. I root for them, and I'll say, I'll ping Ryan Dietrich. I'll be like, "Hey man, you crushed it. That was a great hit." And I'll be, "Hey, thanks, Steve. You see this?" So that's kind of why I have CNBC.
Sounds to me like you have way too much time on your hands.
Todd Stone will be on the TV. I'll be like,
A lot of time.
Great job,
We gotta get Strazza some more work, I think. Sitting there watching basic cable, rooting for his friends. What the fuck are you
rooting for my
talking
friends,
about,
man.
bro?
Just rooting for my friends.
Dude, that's like Saquon Barkley not playing and then watching like another game that's going on in another part of the country and like rooting for like his college roommate that's playing for the Browns instead of focusing on what he's doing. That's like that.
I'm not even kidding. So Josh was talking about us on CNBC the other day, and we caught it live. Jay Woods was like tweeting about it too, but all of a sudden I'm up here and I hear Rose screaming
talking
downstairs.
about us or talking about you?
Yeah, Josh mentioned me on the Half Money show or whatever. And Rose is downstairs screaming. I'm like, what the hell's going on? So I run downstairs. I'm like, she's got the controller. She's rewinding it. Josh is talking about you. So that's why we watch. We're rooting for our friends.
You've been watching for 10 years, waiting for somebody to give you a shout out. Yeah, you got your shout out. Are you happy now?
I've been waiting 20 years for this.
I was going to say, Pat, which of these charts should I bring up? The arc, the energy,
any of them. I mean, ARC is kind of on the topic of what Steve was talking about. I don't think HIMS is in ARC, but it kind of fits with that.
It might as well be. It might as well
might
be.
as well be. Yeah.
Right.
Yep.
But when we're talking about ARC, Pat, correct me if I'm wrong, but we're just talking about junky stocks.
Yeah.
Talking about the risk on stuff. Yeah.
Unprofitable growth. Yeah.
There you go.
And this one's just at a confluence of just a really important level there, around 56, 57. That's the VWAP from the peak there in blue and the 38.2 Fibonacci retracement. And it's just proven to be resistant several times already. Nice little cup and handle action there. I think it's time for this one. And with everything else working in terms of small caps and some of the rotation you're seeing out of the mega caps and large caps, I think this is just an obvious next one. And it doesn't look much between that 38.2 in red and the 61.8 in yellow, but that's like almost 50%. So that's some nice meat and potatoes there.
I like this, Pat. And I also think it's worth pointing out that of all the ARC funds, I think Todd had a tweet about this morning or last night. This is like this is the bottom of the barrel in terms of ARC funds. The ARC F, ARC W, the ARC Q, they all broke out some months ago.
Yeah, that's right. Yeah. ARC F, ARC G. Yeah. Well, actually, I have to check ARC G, but yeah.
No, not ARC G. Forget them. Forget those losers. Still at the lower bounds of the range. But you can look at something like ARC F or W as, I think, a roadmap for what's likely to happen to ARC K, right?
Which one do you think is best there? ARC W or ARC F?
The fintech's on fire.
Yeah,
fintech absolutely on fire right now. So I would say ARC F. I probably am a little bit biased towards the fintech companies. I really like that space. Used to work in that space. But ARC W right? The next gen internet, fantastic. Also, a lot of software in there. Software is really hot right now.
When are we gonna get like our genomics testing? What are we still doing that?
Oh yeah, what happened to that?
It ended up being bullshit. Remember, that company basically went to zero.
Which company was it?
Isn't that the 23andMe? Aren't they a Q?
No,
Oh, I have no idea.
The me. We were
No.
gonna do the were we gonna
Yeah,
so we
Google
looked
it.
into a couple different things. We were thinking about doing the 10x genomics one. It was expensive back then. So this is like 4 years ago. We were really early adopters of the genomics thing. So shout out us.
We were, or
Yeah,
you were?
it's really tech forward over here.
I was mostly Strazza, and I just took his word for it. I don't know anything about science.
What a sentiment sign that was, that I wanted us all to get our genomes read, and like genomic stocks were just like bursting and exploding at the seams, and that was like a major peak.
I know about stocks, wine, and baseball. After that,
you don't
huge
know about
drama.
crypto or bonds or currencies or anything like that.
Well, markets, public markets. I could speak intelligently about public markets, wine, and baseball. After that, I suck at most things.
Shout out reverse repos in the chat today. Wow, what a blast from the past. Used to audit reverse repo market.
Reverse repos.
Yeah, wow.
Dude,
Are we back to
That's
talking about
one
the
of
my
overnight
favorite
repo market?
things.
Is the overnight
Yeah,
repo
the
market a
repo
thing?
market.
reverse repo.
Is that a thing? That was a thing like 3 years ago.
Reverse repo.
Shall we, Spencer? We got 1 minute left for.
Yeah, all right.
We got 1 minute. All right, I just want to give one last shout out, and then I'm going to let it go. Mama's Pizzeria. Mama's Pizzeria in Philly. This is a pizzeria that does not sell pizza. They only sell cheesesteaks. No pizzas at Mama's Pizzeria. They stopped making pizzas 12 years ago. Only cheesesteaks. Get involved. Mama's Pizzeria. If you are in the Philadelphia area, get involved. Great bread. Great bread. Not on the Perlman program. Great bread.
right.
Big onions. Big chunks of onions.
I
Mama's
don't know.
Pizzeria.
I don't know if I could sit through one more Philadelphia themed recess from you. You have disappointed me. I mean, more than you'll ever know. Talking about
I'm going to New York City on Monday. I'm going to the city on Monday, taking my daughter. My wife gets to come too. And
taking your kids there? You're taking your kids
Come to.
You're taking your kids to Philadelphia?
No. I'm
New
taking
York.
one kid to New York.
Okay. All right.
Because the other two can't sit through the Rockettes. Are you kidding me?
Yeah.
Zero chance. We took my daughter last year. Then we go across the street to Del Frisco's, get some steaks. Is that okay? Is that Strazza?
Yeah, that's fine. I'm good with that. That's
All
great.
right.
Yeah. City's lovely this time of year.
No, it is not.
Hey, there we go, Steve.
I love
Now
the
we're
city
talking.
picture. We disagree on this. We will
Yeah, it's
continue this
two guys that have never lived in New York City telling me that it's a good time to be there. No.
Beautiful. It's really
Great
Horrible.
time to visit.
so nice.
Hey,
Horrible.
I did a thing last night I've never done before. I baked my very first ham.
Oh,
Whoa.
As you can imagine,
picture?
I am a Jew. We don't bake hams. We don't do that. It's not a thing we grew up doing. But I got a free ham at the store over the weekend, so I baked it. It was a half a ham, but
Spencer?
I baked it.
Spencer, can you give us the backstory on how you got a free ham from a store?
Yeah, I'm curious about this too. They don't just give out free hams.
Yes, they do. For Thanksgiving,
someone give you a ham?
Yeah, they do.
If you spend X amount between like end of October and end of November, you get a free turkey or a free ham.
Got
Yeah.
it.
And I got a free
That's
ham.
the thing.
I'm
That's a
aware
real
of this.
thing.
No, I'm aware of this. Yeah.
My wife's complaining that we're not getting the free turkey. She's like, "Why did you go buy another turkey? We get the free turkey." I'm like, "Well, first of all, turkey is 50 cents an ounce, so they're just giving these birds away. So it's okay. We're spending fucking $20 a ribeye when we buy steaks. Like we can buy our own turkey. It's fine." And then so I got a spatchcock turkey brined, and I spent a couple more bucks than the free one. But Spencer's right. They give them away. That's how cheap these birds are. Nobody wants these birds. They're giving them away.
Yeah.
Well, the
Anyway,
hams-
it was fun.
the hams-
Now I have. I don't know how I'm going to eat all this ham, but I have 10 pounds of ham, to eat for myself. So, it was fun. I enjoyed it. Baked ham.
Well, when that rule was implemented in the Jewish religion, it was because pigs were killing people, so they created that for safety reasons. It wasn't a religious thing, right?
Pigs are dirty. That's why. Pigs are
Didn't they
dirty
do
animals.
the same thing? Isn't that why Wall
I
Street's
have
called
one of
Wall
my
Street?
neighbors has 3 pigs that lives in her house, and they are very clean animals, actually.
Well, then, okay.
I'm pretty sure they built the wall on Wall Street to keep the pigs out. To keep the
No, that was the
No.
that was the English.
The wall,
Somebody
yeah,
told
the
the
wall
English.
was to keep the British
There's
out,
probably
man.
something right.
Yeah, that was the Dutch were preventing the English.
Yeah.
That had nothing to do with hogs.
My neighbors have pet raccoons.
That's lovely.
That's so Florida.
Story.
Do they have that's so Florida? Do they have a squirrel? Is there a peanut the
story.
squirrel?
They have raccoons.
Fred the raccoon meme token never took off. Kind of
No.
a bummer.
Yeah, it was a dud. Huh?
I got
All right,
caught
once
holding the
again,
bag on that one.
We have so Spaces at 11. You guys are doing the Flow Show today at 1 o'clock, and then 4 o'clock Eastern Time. Strazza and JC going live to talk about some of their recent trades, some huge winners, and maybe a couple that didn't work out as well, and talk about how they found them. More importantly, how you can find them too. That's actually what matters here. So the link is pinned to the top of the chat. We'll see you guys there at 4 o'clock. Thanks to Ari Wald today. Thanks, Patrick. Thanks, Kenny. Thanks, chat. Oh, PSA, programming note, no show tomorrow. I almost forgot.
Yep.
No show tomorrow. And obviously no show on Thursday. So we'll be back on Friday. So happy Thanksgiving, everyone. I hope you all have a great day. Eat some good food, enjoy your family and friends, and enjoy some football or whatever it is you do besides eat. And have a good holiday.
Happy Thanksgiving. Be grateful.
That too. Be grateful. Bye, guys.
Adios.
I can't take no loss. I don't even know what it costs.